So I'm here to come to sell them again. 9.5 straight night, 20 straight night, even straight here. Now guys, 8 halves are trading as well.
What's going on, traders? So this is going to be a video about the NASDAQ and how to use a footprint chart to essentially trade the chop. I know a lot of you guys out there love scalping the NASDAQ, and basically these settings will help you guys to hopefully kind of see where larger players are positioning and how you can kind of use that to your advantage. So without further ado, let's get into this chart book over here. So what we have here in the middle is a footprint chart, and again, if you haven't watched any of my other videos, I suggest you do that so that you can maybe learn a little bit about how I organize my footprint. But I'll go over it real quick again here. Just looking at this footprint over here. Let me turn something on real quick so I can mark up my chart. Looking at this little bar here, this left side is net delta, the right side is volume. Okay, and these bars here, the length of them, the setting is that the length of them is relative to all visible bars on this screen. Okay, so what that means is that any bars that have printed within this window, all the way from the bottom of the screen to the top of the screen, even if it's not visible in your window, but essentially from this time here all the way to the right, the width of these volume bars is going to be relative to whatever is within this time frame, right? Or visible bars as it's defined in Sierra chart. Okay, so why that's important is because it allows us to look at essentially volume nodes, right? You see this? See how it's a big volume node? There's a big volume node there. Big volume node here, right? Kind of longer distribution volume node in here, some a little bit here, right? Kind of comes out here. A big volume node here, right? Some volume here, a big volume node here, right? Now we see that these are kind of starting to line up here, right? This as well, less interest up here. Okay, so and why that's useful is because if you don't set it that way, then what ends up happening is the volume bars are relative to whatever is printed within this bar, and so you might have a really fat looking volume bar, right? That's that mint green color here, background, the visible bar. You might have a really fat looking bar, but it's maybe a third or a tenth the number of contracts here, whereas this one, because this is it would only be comparing the width of the volume bar to whatever is within the bar itself. This one may have a bunch of contracts here, a little less here, but it's still like maybe 5 times the size of what's up in here, and that matters because you want to attempt to find rotations in the NASDAQ. So what I'm using here is a point and figure. 5-6, it means there needs to be 5 rotations with reversal of 6 ticks before a new bar prints. And let me show you why that's useful to set it this way. So first of all, I've got this DOM on over here, right? This is clickable, right? I can enter orders. Here and just trade directly from this chart. So anyway, over here on the right side is the DOM. I'll turn that off real quick. Trade mode off. Okay, you can still see the DOM, but now it's not clickable, right? Okay, and let's get rid of this window because that's not really that helpful. It's just taking up space. So we'll go show market data columns. We'll turn that off. Okay, and then we'll lock this fill space. LFS, see that button? Okay, so what I'm going to show you guys is, all right, this point in figure 5-6. You guys need to learn to essentially mess with this during the day. So I'm going to back up out of my settings here. So first off, this tick size here is 0.5. Well, the normal is 0.25. So let's look at what happens when we set the tick to 0.25, which means all the volume will aggregate at every single tick specifically. Okay, let's hit apply. Alright, let's get out of this and fix the scales now. Okay. So you see how it's aggregating now at ticks? At each specific tick, well, it makes the bars a lot longer, right? A little bit more difficult to see the ranges, right? Because it's not aggregating the volume that occurs for 2 ticks on a single level anymore, right? It's aggregating tick by tick, so it's a little harder to see the entirety of these moves. So that's the first thing you want to do, is you want to go in here, if you're using Sierra Chart or your respective software, and change your tick size to something like 0.5. Now, as the NASDAQ gets more volatile, you want to move this up to say 1 point or something like that. But for now, half a point is great. Alright, so let's adjust that. It'll affect the scales, so we need to drag the scales to make it... Oh, wow, what did it do there? Alright, reload, recalculate. Let's do that again. Didn't like me doing that. Okay. Alright. Oh, you know what I did? I didn't deselect auto set from data feed, so that was my problem. That's what caused that blanking out. So I'll have to adjust the scales here as it aggregates the volume now. Alright. Oh. Alright, so let's stretch it down. Right, see how that allows us to see more of the NASDAQ? Like significantly more. Well, we'll get rid of this lock fill space. Alright. So you see how that allows us to view more of it? Like, let's look and see what happens if we go to say 1 point. All right. All right. Adjust the scale again. Oh, we're already in adjusting mode. Okay, there you go. All right. See that? Now it's going to affect your PNF too, right? Because PNF is based on rotations, right? So there's going to be less bars. So this is the regular trading hours open, right? So you see that, how there's less bars up here? And a lot of that is just because now, you know, your baseline chart is based on what? 1 point, right? And so the PNF setting is 5-6, so 5 reversals of what now? 6 points, right? Because your baseline is 1 point. Not, see, if this was 0.25, it'd be 5 reversals of what? 1.5 points. So you see how less bars print. So you have to adjust the other side. If you're using a point-in figure, which is what I use a lot of times, because it shows me those accumulations as price essentially moves up and down in a range, instead of printing, you know, a bar here, a bar here, and here, and here, and here, and here, right? And then you have to sort of look at the volume. Is that high volume or is that low volume? Now you could actually it's going in one direction. Let's say it reverses only 5 ticks, and then 5 ticks, and then 5 ticks, or maybe 6. Maybe it's going 6 ticks, right? To go with this setting, right? Maybe it's going 6 ticks. 1, 2, 3, 4, 5, 6. And then here it prints a new bar. And then it shows you, right, this would be the volume profile. It might show you like that the volume profile looks like this, and then like the point of control is here, right, the highest volume area. And is that useful? Yeah, you get this bar, and then at the top of this bar you just start to see the volume aggregating like this, right? Because it's reversal based, and 5 over 5 prints a new bar, right? Or 5 reversals of 6 ticks, and we've defined a tick as 1 point. All right, so now we can go change this, right? Because we want to see more movement here. But you can kind of see as here we came down. What is this? A P shape, right? So short liquidation kind of looking bar. And then as price came and moved back up, it rejected right into the event, essentially the point of, or the highest volume, or HVN, and it moved back down. But for shorter time frame scalping, right, you want to set this in a way that shows you those rotations short term. So that's what we're going to do. So so we have this set the tick size to 1. So remember, keep in mind that again, as you increase this number, you have to consider what the PNF is measuring based on this. It's measuring 5 reversals of 6 tick sizes, right? And it's 1, so 5 reversals of 6 points. Now if you set this to a quarter, or 0.25, right, that's less movement, right? Because the NASDAQ is going to move, its actual tick increment, we know it's a quarter point. So just keep that in mind. As you move this up, you're going to have to change this and lower it, and lower this as well, to show you the rotations. And when I say rotations, what I mean is price oscillates up, and then longs take profit. Maybe some people get short into the hole here or something, and then we rotate back up, and then we rotate down, and price consolidates, right? So these are, when I say rotations, this is what I mean. That price is, cleaning out inventory up here from weak longs and weak shorts, right? So people who are looking for short-term price movements. And that's kind of what we're trying to follow to scalp a little bit in these ranges, okay? So when I'm talking about rotations, that is what I'm talking about. Okay, so let's go adjust this. Let's change this from 2, right? 2 rotations of now not 6 points, but let's say 2 rotations of 2 points, or how many ticks, right? 8 ticks. And let's hit apply. Wow, you see that? Totally a different look. Okay, so this is showing the Globex session here, right? So now we're kind of starting to see rotation in this area, right? But it shows maybe a little too much, doesn't it? Right? It's not really showing us. So this is 12 o'clock. Let's see. I guess we get closer to the close. Let me look. Yeah. All right. Shows you a big position built right in here. But yeah, right near the close, which is what you would expect. All right, I have this is the volume by price study, and then this measures delta, and I have this on the left side, and it starts over at 1 o'clock Pacific Standard, or 4 p.m. Eastern, right? So that's why this starts here, right? So remember that point and figure is not time-based, it's rotation-based. Okay, so I don't like how this is set up. Okay, we were trying something. I don't like how it's not showing me aggregations up here, right? Volume. Essentially, I want to be able to look at profiles more. So okay, we need to lengthen this out. So we're going to stick with 2. but we're going to say 4 points, right? Because our tick size is 1 point. All right, let's hit apply. All right, now we're talking. Now we're getting somewhere. Okay, now we can see a little bit more of what happened today, but I still don't like it that much. All right, let's go over here, because this isn't a huge ranging day. Yeah, it rallied 120, 130 points, right, from low to high. But what we're concerned about is, okay, this impulse, okay, that's great, right? We could see initiative buying through there. We're not going to discuss that. We're going to look at, we want to see the rotations through here to try to get an idea of where we should have bought and where we could have sold for small moves, okay? So let's go over here to the tick size, and let's say 0.5 point. And let's change this to how many rotations? Let's say 4 rotations, so 4 rotations. And let's do 8 ticks. And click apply. Alright, and because we changed the tick aggregation, we have to change the scales. Alright, there we go. So this is actually very nice to look at. So you can see what happens here, right? In this area, as we come down here, huge volume is printed in this area. So a lot of interest to buy. A lot of interest to buy, then it tapers, then it comes back. And as soon as we get over the high volume area, so what this allows you to do is put on risk with a defined stop. So you see that? It's kind of like going out like that. You can see some high contracts here. So as we get over this area, we know what? There's likely going to be shorts, right? Because as price makes reversals, what do people do? They like to short, looking for breakouts. But here we have a higher low, right? And this candle also a higher low. So as we break up over this, you can put on risk here and put your stop, say, underneath the volume here. So maybe down in here. So 68, with a, I don't know, 6 or 7 point stop, right? The smaller your position size, the wider your stop, right, to give it some breathing room. And then you can see what happened here. As we went up into this prior volume node, what happened? There was more resistance. So it would have taken some time, and it did take some time to get through there. But in through this area, not a lot of contracts traded. And once again, once we got close there, not a lot of contracts traded again. Here, let's move this up. And then as we broke out of the volume area here, there was profit takers, okay? Again, another low volume node. Price likes to go revisit that a lot of times. Sometimes it rejects. This time it didn't. And notice what happens when we do get like these little volume nodes, right? Ask yourself on the day, when you get a big volume node, how much does it typically spring up? So what is that? So this distance, so 84. Next volume node, 94, so 10 points. All right. And then another volume node. Okay, so here, a fair amount of volume right through this area. And initially, so we above 14.5, you would expect profit taking. You had that. And then here, look, profit taking right above here. So it's getting weaker, right? And this is where Facebook had its positive news. So Facebook was absolutely ripping to the upside, and you have to consider that. And then what? Another profit taking volume node. Look at how close that is, right? So you have this, and see the distance, and then you finally have this one where it breaks out, and then it hits its sort of measured move off of, right, this to this, and then you double it, and boom, we hit our measured move up there, right? And that was it short term, and then we kind of rotated back, right? Facebook, and then Google had some news, some bad news, so it was a little volatile through this area. But look, as we push down, look at the contract values going up again, right? So shorts are already covering through this area like crazy. So then we move back up, and then what ends up happening again? Massive volume in through here, right? So you can see that there's some exhaustion forming, essentially, because look at the structure of this point figure, right? You see how it comes out, forms this like nice P shape here. That's a short covering type of candle, right? Where they distribute higher and force the shorts to cover even higher, right? And then we had a little bit more, little more FOMO towards the close, and then there wasn't a lot of interest to buy, right? So it tapered, and then where did we find volume again? Essentially right through this area once again. So, that's kind of more of a macro view of these volume nodes and how they tend to kind of cluster. And why I'm pointing them out is because these clusters, so I'm gonna adjust this again. All right, and you guys should be doing this too. But we're going to adjust it to 5-6, and then we're going to put it at a quarter point, right? So it's natural tick size. Hit OK. We know because we adjusted the tick size, we have to adjust the scales again. All right. And there we go. About there. Yeah, about a little more. Maybe there. Okay. Oh, did I get that right? Nope. All right. So this is 5 rotations of 6 ticks, or 1.5 points. Okay. So now let's look at it. You're like, oh my gosh, it looks like this looks crazy in real time. Okay. So one thing I want you guys to look at, right? You see this level here? No contracts traded on it. It skipped it. These often fill back in, right? So here's your volume node, and then there's still a lot of interest up here, but notice when price retraced, came kind of into this volume node here. All right, let's move this over. Yeah, that's good. All right, it kind of came into this volume node here as the the contract numbers were higher, and then boom, pushed back up. All right, so let's watch this. Okay, prior volume node, right? What ended up happening when we moved back up into this area? It ran into what? Resistance. And you can bet that the price oscillated like crazy in this area, right? You could have scalped 4 or 5 points. I just remember, I know that you could have, through this area on this volume node. But price eventually moved back up. When it moves over this volume node, what happens to those shorts who are short from here? They now get squeezed. And there are folks in Discord, in the private group, that can testify that I said, if we move over this node, it's going to get shorts on the ropes. So we'll probably, I think the way I described it was, we're probably going to get a little bit squeezy, right? And that's what ended up happening, right? We pushed up fairly quickly. So these volume nodes, you can kind of use them to, okay, if you get over it, you can kind of define your risk, put a stop underneath here, and scalp, knowing that, okay, shorts are likely going to get squeezed for, 4, 5, 6, 7, 8, 9, 10 points. Right? So that's how you use it in this chop zone that a lot of people hate trading. They're like, well, shoot, I just want to see sharp, I want to see sharp impulse moves followed by, sharp pullbacks, and then I want to see it break again. Well, yeah, that's everybody likes to trade this. It's super nice to trade this kind of action, but sometimes you do get this kind of action where it pulls back and it does weird things and it rotates, and using a footprint can really help you to see those volume aggregation and to know, hey, if I'm short here, right, and I'm holding out for a bigger move, and it breaks this, like I'm short here, right, and then like there's a volume node here and then another one up here. If it breaks up here, do I want to be short anymore? Probably not, because that means all these guys lost the battle short term. Okay, so that is how you kind of use these volume aggregations or volume nodes to kind of help you to put on risk, right? And you'll see in real time, you'll see the tape, all right, you'll see the depth of market, but then the NASDAQ, it moves really fast. A lot of HFTs playing in there, but you'll see it. You'll see the tape pick up as we start to hit asks up here, and then again, you wouldn't want to be short there. You'd consider now going long above these volume nodes. So let's just look at it a little bit more, right? See how hard it is to view the volume nodes that developed in this area and in this area when you don't have it aggregated, right? So switch your views sometimes based on the way the market is moving. That's really important to do. There might even be, right? If we're consolidating in this area, would you want to see what it looked like here? Okay, so okay, put your cursor over 73 down to what, 60. So how many points is that? 13, 14 points? And it's kind of rotating up and down, up and down. Okay, so if you kind of want to see this area, but you want to see it on the footprint, what do you have to do, right? You see one, so 1, 2, 3, maybe 4 rotations of what? 12 points, right? So if we have this aggregated at a quarter point, right? What's 0.25 into 12? So that's what, or 4 times 12, right? 48, right? So, okay, well, that's that's a lot of rotations. Okay, so how can we make this fit what we want to see a little bit better? Okay, we can go to 0.5, right? And then we can go up to, I don't know, 5 dash, let's cut that in half. We'll go 5-12. We want to kind of see more rotations. You know what? Let's do even less. Let's do 5-8 because we want to see more. But let's say we want to see 4 rotations. All right. We're going to, again, we adjusted the tick size, so we have to adjust the scales. All right. Let's take a look. All right. Adjust it about there. Yeah, that's good. All right. So let's take a look. So when did this all occur? 10 a.m.? Okay, let's go look. Where's that 10 a.m. bar? Okay, or that 10 a.m. area. Here it is. All right. So this is that area here, shown all in one bar. So what do you see in this area, right? You see this little double distribution, often very bullish, right? And what did we come back and test? Sort of the volume area, just a little below. They love running stops, right? But often on short time periods, what you'll see is you'll start to get an idea of how this moves. And look, right in through here, now you see when it came back up. You see that volume node? When it came back up, it came through here on very low volume, right? So this was profit taking, right? And this was all the accumulation, and they were able to just squeeze shorts, and shorts just boom. And what did they do? They covered quite a bit higher. So when you break an HVN, and I know I'm repeating myself a little bit here, but when you break an HVN, right? After big volume down here, you can kind of like count the volume in your head. Okay, huge volume here, down here, and we're pushing up. Is this going to be significant? Probably not, because what was this? Probably profit taking, right? And maybe some shorts, right? Now that we're pushing back up. So you can see the shorts got absolutely crushed through this area. And then as we got above, now the longs start taking profit. Almost instantly, just points above, right? And then you had that whole, you know, HVN, 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 and then out of steam, right? So three sort of big profit-taking areas, and then reversal. And it's, again, going back to this, it was very close to the measured move up here, and then boom, big profit-taking candle, and then the Google news. So anyway, I hope that you guys find this useful in terms of being able to scalp the NQ. Using on days like this, and Friday and Thursday of last week, where it kind of chops around, I actually scalped the NQ very, very successfully using high volume nodes, right? And just dialing in, again, most of the time, if it's in this sort of chop area, what I'm using on my chart settings is something like 5-6, perfect timing, family's home, 5-6, and I'm using the actual tick size. But I'll adjust it, right? And then you know, I'll kind of look at it, like looking over here. Oh, okay, see that? You see how the 5-6 on a, oh shoot, there. You see how the 5-6 shows you a little bit of, like down here, it shows you that taper, and then it also shows you the HVN, right? And you can kind of look left here and go, okay. Alright, if we squeeze back up, right, so remnants here, we already bounced here. Okay, look back, just look left to look at volume, right? How are we reacting as we push above? Okay, HVN here, okay. See how there's another HVN here, right? So price hesitated and bounced around here because of that high volume node. So what you'll essentially start doing is you'll start noticing the way price moves through HVN. So, you know, if there are longs from this area, what are they going to do? If it moves back up, they're going to try to take profit and get out, right? Because maybe they bought the pullback dip, right? So this was Facebook. Oh my gosh, market's just screaming up. So you had FOMO buyers probably buying the dip here. It kept dipping, right? Maybe a lot of them capitulated here. It kept dipping, right? You can see stops are getting hit because of the 100% delta here, right? And then boom, accumulation down here, right? Accumulation. And then boom, rip back to the upside. And then what? Longs trying to get out, break even. And then whoop, all the way back up. So then shorts were getting, you know, torn apart here. So you can use the HVNs to kind of give you a pretty good idea as to, you know, is there some short covering? Are there some longs trying to accumulate? So if we break that level, are they going to be underwater? And, you know, if you start to see through the tape, through the price action, that there looks like some desperation to get out or take a certain direction, well, then you can kind of get into the rhythm of that and find a lot more success. So anyway, hope this is useful. And again, subscribe. Anyway, have a good one. Thanks for watching, and happy trading.